Good morning, good afternoon, good evening, traders from around the world. It's Alan from Wall Street, teasystreet.com. We had a great year last year, um, over 4,000 pips we managed to extract from the market, and we made over 340%, so we've done really good. And we're hoping this year to do even better. We've refined some of our trading methodology, and hopefully we'll get some good performance. So what we're going to do right now is we're going to take a look at the market and see how we're going to look to trade it here this week. Do the same thing every weekend to be prepared for the week ahead. So I start out with going and finding a calendar. Whether or not you trade the news is not important. The important thing is to not to be blindsided when news comes out. Again, I've said it before, it doesn't matter what the data is. We don't care what the data is. When we trade the reaction to the news. So, what the actual data points are really doesn't concern us as scalpers. But what does concern us is the times of the releases so we can be prepared for them, because you never hold a scalping trade into a news event. Always close them out ahead of time. You can always re-enter later, but sometimes when the news comes out, it can be in your favor. Other times, it will totally wipe out your account. So it's best to don't have scalp trades on during those news times. So there's several calendars out there you can use. For the weekend prep, what I like to do when I'm getting set is I often start with this one here from Forex Factory. Pretty much everybody's familiar with it. And I want to take a look at the events we have here. We're not going to trade all these events, and a lot of them are not important to us. So what we're going to do is we're going to filter some of these out for the week ahead. First thing we're going to do is get on the right week here coming up. And then we're going to come up here to filter. Now we're going to turn off the oranges and the yellows because they really don't concern us. Most of the currency pairs here we'll go ahead and leave up just in case we decide to trade any of those news events. Hit apply filter. And this is what we want to see right here. All these red events we need to be aware of so that we're not trading into these events. When the news event occurs, you wait till the market settles down a bit, then you go back to looking for your scalps, for those of you that don't news trade. So the big ones we need to worry about here this week. The main one we're going to worry about this week is, of course, non-farm payrolls down here on Friday. That's the big one for the week. That will definitely get the market moving. 2 o'clock, we've got FOMC minutes here on the Wednesday. That's going to be important to us. That's usually one of our best trades of the month, is trading around that time. So each and every one of these events we need to be aware of. Now, if you have to, you can print these out so that you can carry them with you. If you're moving around, print a copy off, stick it in your pocket, carry it with you so you can always be aware when these news events come out. If you have an app, you can always save that picture, take a snapshot, put it in your Dropbox, go to your phone, and go to Dropbox on your phone, take a look at it. Just make sure that nothing catches you without you being aware when they're coming out. So these are the important things that we need to know. So, for example, Monday, if we were going to trade the European session, we'd want to be aware that, that there's some construction PMI coming out for the pound. So we wouldn't want to hold a trade at that time. We'd want to wait till that news is released. 7:30 p.m. this Aussie trade balance probably won't move the market too much, but again, you want to be aware. And the reason why I left the white ones in here when we went up here and picked filter is because you also want to be aware of holidays. Now, the Italian holiday, that's not really going to slow the market down much, but if it was a European holiday or a US holiday, or an Asian holiday, those we want to be aware of. So we'll take a snapshot of this and have it set aside. Then we'll go and we'll take a look at the charts and see what we have. So this is the last couple hours of trading on Friday, and we had a couple good trades in here, even though it was really very low liquidity on Friday. Then what we'll do is we'll look at the market, see how it gaps on Sunday. But currently we've been trending downward, so we'll probably still look to trade mostly to the downside coming up this week, especially if we take a look at this is a 70 tick chart right here. That's my main trading chart. You don't have to use a 70 tick, but anywhere close to it is what I like when I'm doing my scalping. If you wanted to use a 100 tick chart, I use that too sometimes. You can trade it just as well. So anywhere between like a 60 to 100 tick is fine for monitoring the market on a daily basis. But I also keep track a little bit longer term on what I like to use is a 500 tick chart. Some people use a 5-minute chart. I just prefer tick charts over minute charts, over time charts. I think they're give you a much better picture. And what we're going to look at here is we're going to try to get an idea of the market participants and how they've been trading. So one of the ways I do that is I like to see what the ranges have been lately, because ranges tend to play. So I'll grab a ruler and I'll measure these moves from the highs to the lows for each day. There we had 52. You can see here 52 pip move on that day. There was a 64 on that day there. 70 on that day. And about 100 pip range here on this day. So you can see we've been all week long. It's been not really very volatile until Friday. So we're going to look for the same move on Monday. We're going to look for the moves to be somewhere between probably 70 to 90 pip range on Monday. And once we get outside of this 100 pip range that we had here, then we're going to start being cautious on our moves, because since we've haven't traded over 100 pips all week, the likelihood of our next trades, trading days going over 100 pips, start to diminish. So once we get up to around 100 pips on the daily range, we'll start scaling back our positions on our trades. That's how we're going to look at the long-term trades. Get that back set on another monitor. But this is our main trading chart here, the 70 tick. And as long as we have lower highs and lower lows, we're going to continue to trade to the downside. So, it's real easy to pick out these lower highs, lower lows. You don't have to be real technical about it. You just look at the major moves. We could start here with the last recent high right here in this area. And we'd go from here to this area here, mark that as a lower low. You can see this previous low, so here's a lower low. Here we have a lower high because it's lower than this one. So it's a lower high. Come all the way down here for a lower low, lower high, lower low, lower high. And here we have equal lows. So at this point, we're going to start looking for maybe a range break trade coming out of this one. We did make a little bit higher high, so now if we were to take a trade at this point, we would be inside the market. That's not a good place to be. So we want to wait till our trend resumes. And then we come back down here, equal low, and another lower high in this area. Then when it comes back down, this would have been a good trade to take right here to the downside on this range break. And that's how I would have traded that one. So as long as we're getting these lower highs and lower lows, we'll still be looking for the downside. We don't need a bunch of indicators on the chart, a bunch of squiggly lines to tell us which way the likely direction is of the market. keep your charts nice and clean. I do have these alert lines that I use occasionally right here to alert me to the markets taking off and moving, so I don't have to watch it all the time. So most likely I'll drag these down probably around here, about this area here. It'll interest me if it starts to move, and I may even drag this one up to about the 94 area, because I'm not going to look to trade this again until I've broken 94 to the downside. Those people that follow me in the chat room know the importance of that 94 number. So that's probably where I'll set my alerts, and then I don't have to keep a real quick eye on the market all the time. I can go about my business and do other things, and if the market goes to take off, I'll get a text on my phone from these two alert lines to let me know to come check out the charts, see where we're at. So that about sums it up for where we're going to be at the beginning of the week. So it looks like we'll probably still be looking to trade to the downside, like I said, as long as we get those lower highs and lower lows. But we'll see after the opening gap on Sunday, or on be Monday morning Asian time, and see where we're going to go from there. So again, we had a good year last year, and I hope everyone else had a good year last year. And we're going to try to extract more pips out of the market this year than we did last year. That's how we're going to judge how well we've done this year. So hope y'all had a good trading week, and we'll see you in the next video.